as they can, but they got to lower the rates at some point, especially with the election coming up. You got to boost the economy a little bit.
Yeah. I'm surprised they haven't lowered it sooner because of the election coming up.
Yeah.
I don't know why. Like, I'm still, like, obviously, like, hindsight's 2020. I'm still confused. Why did they keep rates so low for so long? Like, why not just, like, they lowered it to 0, and then after, like, even just 3 or 4 months, bring it back up to 4. You know, we don't need 2.5. Yeah, it's 2.5% for a 30-year. That's great.
It lasted a long time, huh?
But that, I don't know. I feel like they lasted like super low rate, like under 4% for. I feel like it was under a year or over a year.
Yeah.
So it's like, oh man, like yeah, that's great, but now we're 6 to 7% today. You know, and and it doesn't. You know, I know eventually they do need to lower it down to a little bit more reasonable rate, but I'm so confused why they kept it so low for so long. So, but you know, anybody that purchased or refinanced between 2020 and 2021, you know, they're going to keep that loan for almost ever, probably.
Yeah. I mean, that's why.
And that could create a issue in of itself years down the road, right? Because people normally either buy or refinance every 5-7 years, or I think the average is 7 years. You don't keep your loan. Mm-hmm. Now it's going to be a lot longer.
I mean, that's why we're seeing the inventory continue to go down. It's because, and I have clients that are in that boat. It's for like, well, I got a big loan. Let's say you bought like a $2 million house, jumbo loan, and you're at 3%.
Yeah.
Now you want to go back into the market at 6%.
Yeah, man.
It's
double that.
Yeah, your payment's going to go, almost double.
Yeah.
So it's going to make the inventory stay low for a while.
Yeah, and
unless they bring rates back down, where people are like, okay, I can trade out of this loan and get into that loan.
Yeah.
But if it's not going to be advantageous to trade, which it doesn't look like it's going to happen.
Yeah.
Not what I'm hearing anyways. When we were at that seminar, they were saying that the reason a lot of these guys, now I understood what he was saying when he says there's going to be so much opportunity in the next 2 years. What he's saying is so many people went into commercial real estate, but they bought with these loans that are low.
Yes.
Okay? And when those loans are low, they only have a shorter term.
Correct.
They have 10-year
right.
terms.
5, 7, 10.
5 years, 7-year terms. Those terms are going to come up due, and now they're going to be at 6%. So that's where he says they're going to be forced to sell.
Yeah.
They're going to have to get out. They're going to have to take a major haircut on a lot of these deals.
Yeah, because some of those deals they'll do 5, 7, or 10 year, and it could be interest only for a period of time. So like they're cash flowing quite heavily at the beginning.
Yeah.
But as it amortizes into just a traditional loan that you pay off principal as well,
yep.
Your payment's going to be higher than obviously an interest only loan. That's gonna, especially if you're kind of new into that industry,
yeah.
and you're banking on rates being reasonable for
10 years later. That's where the opportunity lies in this.
That's cool.
Some of those stuff's already coming due. And some of that stuff's already coming due, and they're going after it.
Yeah.
And they're trying, and they also know that they understand that in the last year, those properties aren't worth what they were a year ago.
Yeah.
Because the way you calculate it is different.
On the financing, yeah.
Correct.
Because you do take financing and debt into consideration. Yes, cap rate basically is a cash on cash return.
Yeah.
Not considering a loan, but still, if you're getting a loan, and most of the time you're getting some sort of loan when you're buying multifamily, you're getting debt. So if the debt now doubles, I mean, look, we bought 8 units in Dallas a year and almost a half ago.
Mm-hmm.
And if I would have even bought it at the same price I did a year and a half ago with the loan, my payments would be 50% higher today than they are what I bought a year and a half ago. So that's why, and I as an investor, you're taking that into consideration when you're going to go buy, because that debt is part of the piece to that, know.
So even if it's a great deal, and they're like, hey, I got this opportunity, you're like, I love the deal, I can't finance it.
Right.
Only way I can finance it is if you come to this price.
Exactly. And it's
how bad do you want to sell?
Right. Yeah, that and or some sort of seller financing. But if that seller isn't 100% owner or have 80% equity, they're not going to be able to do seller finance because they have a loan to pay off and they probably have investors and stuff like that too.
So that's somewhere that's good to look. is somewhere that's paid off, seller finance, their
in
terms.
this market.
Yeah,
That's good. Yeah, I like that.
So that's where his big opportunity was saying. I mean, it's a lot of good information.